So we got a pretty good representation on the topic. The topic is the dance between corporates and startups and what every early stage startup needs to know. And it's been a real pleasure to kind of pull the panel together. I think we really have some great folks here. And so we're going to spend 30 minutes talking about it. So we're going to kick it off, and we're going to jump right into it. But first, let me ask my panelists to introduce themselves and what they do very, very quickly. And then also, what's your favorite dance move? If you don't want to show us the dance move, you can say, what's the style of dance that kind of fits your personality? All right, so introduce yourself, dance move. Debbie, why don't you start us off?
Hi, everybody. Debra Brackeen. I lead strategy and innovation for CSAA Insurance Group, also known as AAA Insurance. Favorite dance move? Was not expecting that. I'll just go with the hustle.
There we go, the hustle. Is that a side hustle or is that a real hustle?
Do we have to show it? Is it physically?
I hope not.
Okay. Hi, everybody. I'm Ravi Belani. I'm the director of Alchemist. Alchemist is an accelerator for startups that monetize from enterprises. We give you $36,000, and we have a 6-month program focused on fundraising, customers, and mentorship and community. And we were the #1 accelerator in 2016 based on how much money our company's raised. YC was #2. But favorite dance move, I should say Bhangra because I'm a Thai, but I'll dab and
the light bulb?
Or the light bulb. Screw the light bulb.
All right. I'm Stacey Shulman. I'm the Chief Innovation Officer with the Intel Corporation in the IoT group, focused on retail currently. My role in the company is incubating and not innovation, but solving the right problems and incubating solutions around that. I'm gonna have to go with hip hop. I know I look like a hip hop artist, so I know that's what you guys were thinking, but that would be mine.
Okay, all right, yeah. Well, very good. Yeah, so when we got together and we were preparing for this panel, we said, okay, well, the corporate startup kind of partnership is pretty broad. It could be how to structure and start doing a corporate venture round with the CVC. It could be around positioning for an acquisition with the partner and going through an exit. Or it could be about partnerships, how to actually have go-to-market business development type partnerships where you have synergies on both sides, and it's not about the exit, and it's not about investment. And so we said we really resonated on that aspect of it. And what I want to do is maybe go down, Stacey, maybe you can kick us off. When you're at Intel and you're looking at these partnerships, why was this an important topic for all of it? Why was it important for you when we started thinking about partnerships as a place to focus on?
Sure. I'm probably going to represent partnerships a little different than the other panelists. In that, in my role in particular, I'm not on the investment side. And the way that we look at partnerships is we partner with smaller companies and we help them get over the hurdle with some of the large customers that they would have to work with. There's a kind of a challenge if you're a startup and you want to work with a large company. They typically want your price tag to be at about 0, and that's when you can at least afford to do that. And so we'll come in and we'll help with that dialogue. It also helps to have a large company behind you to reduce the risk for that customer that you're talking to. So if you're a startup and you're a 5-person startup, sometimes 3-person startup, and you go to talk to a very large company, it makes them feel a lot better that Intel is there with you at the table. So that's the way that we partner with companies.
What's an example, if you can, one of the things that we wanted to do is really get concrete. What's an example that you've seen work well? What worked well? Either at Intel, I know you've been at other companies as well. What's been working well?
Wow, there's a few of them. We just did one, and it's public, so I can talk about it openly. But we did one with a company called Bossa Nova. It's a robotics company, and Walmart. And if anyone in the room has ever worked with Walmart, every company I've ever talked to says they work with Walmart. And it's a challenge, and so we worked with them. We helped navigate some of those conversations, and we also helped where they got stuck with certain tech problems, where we'd bring in engineers and work with them side by side on that. So that would be one example.
Yeah, excellent. Debbie, why don't you go next? Sorry, Ravi. Why don't you go next?
Ladies
Debbie.
first, Ravi, I
Yes.
guess. So partnerships with startups matter greatly to me and to my company, and I think to all large corporates, because I actually feel strongly that corporates need startups and startups need corporates. Corporates, are not as fast, they're not as agile, and they tend to have difficulty thinking outside of the box. So we need that access to, the innovative thinking and the speed and agility of startups. Startups need access to distributions, channels and customers, and we can bring that. So to me, they're very important. I also think that it's really critical, and I've been on both sides of it, by the way. I spent a few years at venture-backed startups trying to partner with and or sell to large companies, and it can be really, really, it can be, the worst thing is to get strung along by a large company. So I'm also very passionate about making sure that we're trying to reduce friction when we're engaging with startups for that reason, because I know how painful it can be. Couple of examples for us. One partnership that is public that we've been in for the last year and a half is with Lyft. And it maybe won't sound that innovative, but we were the first insurance company to, if you get your car in a fender bender and it's got to go in the shop for a week, we typically would offer a rental car. Rental car process is full of friction and it's not the most convenient thing. So a year ago, we partnered with Lyft to offer a Lyft credit in lieu of a rental car. It was wildly successful, piloting here in Northern California. Literally had very high NPS scores, 0 detractors. And what was interesting is, in terms of mutual, I don't think this was something, honestly, Lyft was really focused on. They are now. But we were able to get, I think it's like 40% of the people that we made the offer to took the offer. And actually 50% of those people were new customers for Lyft, so there was benefit to them in terms of acquisition, and we're now scaling that across our footprint. I'll leave it at that for now. That's just one example.
Great example. Yeah. And by the way, I should have mentioned earlier, we'll try to take questions from the audience. I do want to get through conversation on panel, but please use either of these two mics and just line up, and then we'll try to get your question in. So Ravi, we heard from Stacey and Debbie the corporate perspective. And you mentor and coach and invest in entrepreneurs. What's the entrepreneur side of the story? Like, why is this partnership important, and what's your perspective on this?
Okay, so I'll hit both of those questions. First, in terms of partnerships being important, a good partnership can catalyze a startup like very few things can if you truly get a good partner. And so as an example for that, we had and just dovetailing on the blockchain discussion, we had a company in the last class that was 3 22-year-olds from the University of Toronto that were great blockchain technologists, but they really didn't know what to do with the technology. And GE, who's one of our partners, had a big need on building out their supply chain with blockchain. As you know, if you're doing something in the blockchain, it's all about getting the network, and you need to get the network to converge. And there's very few people like GE that would be able to converge a whole supply chain industry around a standard. So that partnership with GE was absolutely critical to that company's success, and it would have been almost impossible for them to converge an industrial standard without GE. Having said that, and I think what's nice is that if you have somebody like Debbie or Stacey who can really be your spokesperson to make sure you're not going to get abused by a big corporate, then that's a very critical function to play. An accelerator can play that function where we can smack the corporate if the corporate's abusing our startups, but it's even better if you have somebody who is internally aligned to advocate for you. So having said that, the other side of this, just in full reality, is that most companies, your company's not going to die because it's a bad idea. Very few companies die because the idea is bad. A company dies because you hit the end of a runway and you run out of cash. And so your most critical asset is your time. And when we talk about partnership can mean a whole bunch of different things. Your first customers are really your partners, just as customers, because they're going to be co-creating the product with you. But there's also this notion of partnerships of finding a third party that's going to resell your product. And that always can look really seductive on paper because you're going to be getting somebody else to resell your product, but there's a lot of intricacies to get that right. You have to make sure that the sales team is going to be incented by quotas, not just by extra income, and there's a lot of detail that we might not have time to go into here, but that can be a dangerous trap from a startup side, because you really do want to do the hard work yourself as a CEO of validating how to sell the product before you're just going to throw it to somebody else to sell it for you, unless you do that in a very careful way. And I'll stop there, but we can go into more.
I totally agree, right? I mean, it's like you have to do it first, and then do it 10 times, and then figure out how you're going to grow a channel around that. I mean, it's not just going to magically happen. But I want to deep dive on this a little bit. Nobody wants to get into an abusive relationship. How does a startup think about what are the characteristics of that conversation with a corporate as you're kind of trying to figure out if you want to work together or not? Maybe some words of advice from you first, and then Stacey and Debbie as well.
So if you're going to do a partnership with a corporate, a couple key questions to ask up front are, first of all, what's the process of doing a partnership and who needs to be involved? If there's only one question you remember from today, it's to ask that question. Then you also want to qualify them. Have you worked with startups in the past? And can you give me some examples of startups that you have worked with and how that process worked? And who's going to be involved and how are they going to be incented to make sure that I succeed? Again, the danger is if you get a corporate that's just where you can announce a partnership and that corporate's going to resell you, but you haven't really structured how the incentives are going to be for the people who are going to do the sales themselves. And they need to be incented based on hitting their quota, that it's a requirement, not a nice to have, but a must have. It's one of these things that looks seductive where you can say, I just did a partnership with this great channel, but you're not going to get really any points to it. And frankly, the VCs are going to heavily discount that, because if you can't evidence sales yourself, it's hard for them to be convinced that somebody else is going to learn how to do it. A couple thoughts, but I'll open it up. Yeah.
I definitely am a proponent of the startup CEO and team doing their homework to try to do your best to assess, who would be, a good partner in general, given whatever your market is. And, I personally lead our innovation team. We try to be, the champion of the startup and the entrepreneur, in that we don't want to waste anybody's time. If there's not a fit, we're going to give you a definitive answer. It's going to be a yes or a no, or maybe in a set period of time, but we're not going to string you along with a maybe, because I just think that's really bad for most startups. We work hard with our startup partners to figure out where is the best fit and who needs to be involved. We take ownership so that the startup is not left to the whims of the core business, who's very busy. And if you're lucky and you hit the right business person at the right time when there's an intersection of what you're selling and what they need, you might get lucky and that could turn into a commercial relationship. In most cases, in my experience, those conversations need to be kind of curated. An example that we have recently, we've been talking to a startup called Cape Analytics. They do satellite imagery backed up by AI and machine learning. In our industry, they are focused on insurance, so we're partnering with them, and we had to wait for a year for them to be ready to partner with us in our territories. But we really like the company, and we wanted to work with them in particular. So they're basically assessing our roof condition for homeowners policies, which roofs are the biggest, one of the biggest risks to homeowners, and so. We're excited about that. We think it's a win-win. In that case, it's obviously a mutual partnership with our core business that we helped basically broker.
Any thoughts, Stacey?
Yeah, I would just add on one. I would reiterate actually what's probably already been said, and I think it's important to ask who's the sponsor and how do their performance metrics align to my success in what I'm doing. And because I've seen a lot of partnerships go pretty bad in that the startup they have a really great innovative solution, and the partner company, they use that as marketing collateral essentially, and then flip the deal away from the startup. And I've seen that happen quite a bit. And so if their metrics aren't aligned to the success of the product, I'd be pretty cautious and would dig on that a little bit.
Yeah, I think Ravi, you also underscored that. Stacey, that's a really good point, right? I mean, the incentive structures have to line up. I mean, this isn't just for fun, right? You don't want it just to be for fun. You really want it to line up where it's additive to both sides. So there's a question here. Go ahead.
Hi. Yeah. So yeah, I'm Jagdish. I'm founder of Voicy.ai. We're in the AI space, more focusing on the vision and natural language processing aspects of it. Would love to know from the panelists if there any opportunities in the enterprise AI space with not significant competition, as in like any greenfield opportunities that you guys are seeing and kind of seeking startups? You wish there were some startups seeking those opportunities. Thank you.
Anybody want to tackle that one? By the way, I don't want to turn this into, hey, here's my company, and what do you think about how we can? You can mob them after the panel, and you can ask them about your specific company. But anybody want to take that particular question?
I can comment. For us, I personally think that AI and machine learning, but all forms of AI are going to become table stakes in insurance for a variety of reasons. So in our case, we have an AI strategy. We have identified something like 40 plus use cases that we think are relevant for us to go pursue. And we've plotted them against a heat map, and we're partnering with a variety of different vendors. Some of them are more established, some of them are startups, to sort of test out those proofs of concepts and pilots. So absolutely relevant to us.
There you go.
Everything's AI now. AI is like, and we oftentimes say, Sean Burns, who's the co-founder of Flurry, he has this new term, and he's one of our mentors, AAI, artificial intelligence, because everybody's saying that they're AI. I would almost encourage you to shift your focus from AI to data sets. Think about what data sets are out there that you can exploit or get to, because that, in our experience, has been the differentiating winner. It's actually strange that we haven't had really a huge breakout AI startup success. Many of the top AI companies have been, Facebook, Amazon, Google have gotten, and the reason why is because they're owning the data sets. I think there's some really fascinating things happening with simulation data where you don't need to have empirical data. And there's some really provocative things that I don't want to derail the panel that I think are opportunities for startups. I think the other opportunities for startups are trying to find data sets that big companies don't have access to, and creating businesses around those. Those can be from the government, so there's lots of data silos that the government's sitting on that you can monetize, or it's by building a network effect driven business with these assets that the corporates don't know what to do with. So Palantir, I think, did an amazing job of getting all the CPG companies to cross-share data, and then are building the intelligence layer on top of that. So everything's going to be AI, everything's going to be intelligent. That feels almost like too broad of a question for me. I think you need to tactically think about where can you get an unfair data set that you have proprietary access to that other startups can't get.
Yeah, and the government does have outreach programs to engage with their data, and they have a lot of data as well. Any last points, or can we move on? Okay, so why don't you go ahead?
Yeah, okay. I have two questions. One is specifically for each of you. Which domain and in which stage startups you are looking for? And secondly, I see the problem is like, for getting the early adopter companies engagement with startups. So it should be in any, channel that, you should accelerate it somehow, a better way in Silicon Valley, because there are a lot of solutions ready, and then there are customers they don't know, they are not aware of it, Something should be, it's hard to reach the real customer, because maybe needs in the east side, not here. It's a lot of competition, a lot of people pitching each other. So that's the thing. I would like to ask you a little help about it. Thank you.
Yeah. So let me also put a spin on this question, okay. Which is I think something that we also talked about is you have a bigger question, but one aspect of it is when is it too early to partner with companies? When are the companies too early to do a corporate startup partnership, or is it ever too early? Can we just get going kind of right away? Who wants to kind of go first on that? I know we don't have all the same opinion on this, so it's great to debate it.
That's why you're asking it.
Yes.
I personally think it's never too early to have the right partner, a good partner. It's never too late to have a bad partner. And so, I think that you partner early, you partner quick with a well-curated, well-chosen partner.
I think it's never too early to have a customer, but not a partner. The difference here, and what I mean by it's never too early, is my first piece of tactical advice for any company is before you build your product, validate that the need for the product exists. And that's classic customer development. So when you're doing the initial outreach, you're not really looking for customers. You're looking for advisors who are going to be giving you feedback on this idea. And before you write a line of code, just create 5 to 10 slides on what you think the problem is and what your vision is of how to solve it. And set up meetings with people that can give you feedback on if this in fact is a need. And that's actually how you're going to parlay those into your first customers, ideally. And there's a lot of hacks around finding these customers. I do think that if you do end up working with an innovation team from a large corporate, and it's a real customer engagement, it is really critical for you to understand who is the business unit lead that is going to decide after that innovation period is done on making it a full-fledged program within the company, and try to get them involved very early in that whole process so it's not just a siloed innovation team. Those are a couple pieces of tactical.
Yeah, but we moved from another country. We already sold there, but here nobody knows us.
Silicon Valley is built by immigrant founders. I don't know if you've seen the data, but half of our most successful companies have international founders. You are part of a broad tradition of international founders. You will find customers if you're going after a pain point that people care about. If people care about that pain point, they don't really care where you came from. They just care that they need to solve that pain point. And so the way that you're going to find those people is literally by first, there's a bunch of hacks. And if you check out on our site, Alchemist Accelerator, Chris Duggan has this talk on getting your first 10 customers. That, just for the sake of time, I would point you to that talk. And then we have a bunch of posts on how do you get those first 10 customers. And I can go in more detail if there's a desire with time.
Thank you.
Yeah.
Debbie, anything to add to the conversation?
I think, generally speaking, we would hope to partner with somebody who's already kind of found their product market fit. It doesn't always happen. We've kind of gotten to the altar, and only to have a startup's investors sort of force them into a pivot that kind of derailed our paid pilot, but generally after product market fit.
Yeah, so Stacey, let's not let go of this point just so quickly. So Intel is structured maybe differently than a lot of other companies that are engaging with startups, and so maybe Intel has the view of kind of being stage agnostic, or there's different programs for different stages of companies. Is that fair to say? You want to expand on that point?
Well, and I would say that we probably work more like an incubator or accelerator than your traditional partner, and so. Yeah, for us to be involved, we're okay with early involvement as long as there's transparency. If you don't oversell yourself, if in that space, like be transparent if about what you can do and where you're really at, so that the partnership can be valid. That would be my only comment, is that there's lots of people who come in oversell it. And somebody's got to pay the price for that at some point. Either you're gonna do it in evenings and you're gonna try to get to where you sold really quick without anyone knowing about it, or it's gonna be embarrassing for somebody. So just be transparent.
I want to take a question back there, but before I do, Ravi, you brought up this point about when you're engaging with a corporate, you have an innovation team that you're engaging with up front, but it's really important to know who the P&L leader is. That has the authority to actually, do the resource and the build out together and go to market together. So, and we've all heard and see where the innovation teams can sometimes be viewed as kind of a necessary step to really get to the right level of partnership. But we also have different views on that. And Debbie, you've got the role at CSAA with AAA that you've got both the strategy side and the innovation side. So what does it mean to run an innovation team, and how do you get the effectiveness out of that? How do you kind of build it into the core strategy? What does that feel like, or what is that like at your company?
Well, I've been doing the corporate innovation thing for a while, and I am not a fan of innovation as just tinkering in a lab somewhere, disconnected from a set of outcomes. The reason why we invest in innovation is to produce business outcomes, and in our case. We're in personal auto and home. There's these things called autonomous vehicles that some of you have probably heard about, which represent a long-term existential threat to auto, and that's more than 50% of our book. So we have, and the sharing economy is already, and just kind of consumer patterns and demographic patterns. People aren't necessarily buying as many cars as they have in the past, and so for us, we have a very strong strategic rationale for investing to grow and investing to diversify away from personal auto. So I love I always call it the happy marriage of strategy and innovation. My team doesn't start a pilot unless we have a commitment to scale it if it's successful. And we're very transparent with our partners about what are the KPIs we have to hit in order for that to be deemed successful. So, I'm not a fan. It bothers me when I hear innovation teams being referenced as sort of blockers in any fashion to potential partnerships with between startups and corporates, because I think it is our job to make sure that we're focused on things that are strategically material and relevant to the future of the company, and we should be shepherding along the partnerships who are going to help us achieve those outcomes. And a lot of the startups bring new value propositions for our members and our customers that are really relevant for our future. So.
Okay, you've been patient back there. Go ahead, ask your.
Thank you. My name is Manish. It's a couple of interrelated questions. What is the best way of connecting with you, and if you can talk about the partnering process, and generally how much time it takes if there is any vetting process?
Mm-hmm. So timelines, what to expect.
Timeline for partnerships?
Yeah, with the...
It kind of depends. I mean, I mentioned Cape Analytics. We've been talking to them for well over a year before we were actually able to engage in a partnership with them, and it was primarily because they chose to verify and validate their product market fit specifically in Florida, where there's a lot of hurricanes, obviously, and roof damage there. So associated with that, but that delay was really only because of where they were operating at the time. We've had other partnerships where we had one meeting with a startup that's in Danville, kind of in our backyard on the East Bay, and we just launched immediately into figuring out how we're going to work together. So it really depends, I think, on a combination of if you have that intersection of something that's interesting and relevant to what the corporate's trying to do right now, and the startup is capable of doing that as well. I think it can go quite fast. If it's something that's more future oriented for either or both parties, it can take a little longer.
The supply chain GE blockchain company was 6 months. That's because GE is an LP in Alchemist, and so we had a little bit of a way to grease the skids. I think that is an advantage of joining a program where there's a structured partnership with some corporates. But I think you have to be I think it's a very good question to ask to understand the time frame. Yeah.
Well, and I would also add that it depends on how well understood your tech is. And if it's an emerging area that it's not understood and the operational impacts aren't understood, or the change management's not understood, or the KPIs aren't understood in general, it's just going to take a lot longer because there has to be a little more exploration done there. If it is a well understood area, then it could be faster. But I do think that there's a correlation, a coefficient between, how understood is it, how much in demand is it right now, and what's that company's independent need at that moment, and how fast they can go. So I think it's a tough one to answer.
Kind of depends.
So yeah, it's kind of yeah.
Thank you.
Great. We'll take one last question from the audience, and then I have a closing question for everybody, parting words of wisdom. So why don't we take the question first?
Yeah, in my experience as a startup founder working with corporates, a lot of those initial conversations tend to be very exploratory. It can go in multiple different directions, such as investment, acquisition, distribution, or becoming a customer. And a lot of those, are useful at different points in time. But what is a good way to vet what the corporate is looking for, so that both parties are not wasting time, but at the same time, not like shutting down that relationship for future reference?
Ask the uncomfortable question.
Yeah, exactly.
So the key between great and good founders is the great founders will push those initial meetings to a point of where you should feel a little uncomfortable asking the question. So it should be, hey, there's various ways of asking that question. You can say, look, we're trying to choose 3 partners by the end of July to decide with, because we're not a nonprofit. We have to choose 3 companies that we want to work with. Are you interested in being a prospect for that July close date? Give them something that they have to react to. Or on a scale of 0 to 10, where does this fit in terms of how compelling is this relative to the other initiatives that you're looking at? And if you don't get a 9 or a 10, you can either just say, well, what would be a 9 or a 10? What could make this a 9 or a 10? Or just decide to kill it. But you really want to be upfront and say, hey, the reason why I'm having this discussion today is because, as you know, at the end of July, we are launching our premium program with our first set of partners, and I want to know if you want to be a part of that. And really, there is a stubbornness that great entrepreneurs have to force that, to qualify in or out, whether or not, especially if you're doing within the vague area of partnerships, because that can mean so many different things.
Absolutely. Force the tension. You got to force the tension to really get to what's the real meat of the whole thing. So thank you for that. We're out of time, but I'm going to ask my panelists parting words of wisdom. Debbie, why don't you start us off, and we'll go down the list.
Gosh, parting words of wisdom. I would just say, do your homework. Ask. I love Ravi's advice about force the conversation about a commitment from a corporate. I view myself in competition. I want to be the best partner for startups, and I also, I'm a competitive person, and I want to, there's some startups like I want to be their number one partner in the insurance industry. Because I think they're the best startup with whom to partner. So you should take advantage of that and put us on the spot, in my opinion.
I would say, that's great. I would say my advice is it's not sales, it's not partnerships, it's commitment engineering. Think about it as your engineering commitment, and you need all the corporates need to take you as seriously as you're taking them. And approach it with that ethos, and demand ask the hard questions and demand equal treatment with how seriously you're going to be taking that corporate too.
Right. Stacey, bring us home.
Yeah, I can't stress that enough. I mean, it's one, I still believe wholeheartedly in I call it aggressive transparency and curation. You've got to curate your partners down, and you got to do it quick because they will waste your time if you don't. And so curate, ask the hard questions, move on. If they're not right, go to the next one. But I don't think you can do that without absolute transparency.
That's great. That's great. Thank you, everyone. Sorry we didn't get to all the questions. And I appreciate everybody's time today. I appreciate our panelists as well. Thank you.